Okay, good morning, you beautiful human beings, guys. It is Monday, brand new week, brand new opportunities. So let's dive into, let's have a look at what you need to know this week, what is super important, and what's going to be part of our strategy for this week to milk the markets. Now, I must say last week was pretty much a terrible week, or one of the worst weeks in the last couple months of trading. And generally speaking, we give the team off. We don't trade that first week in January. And this year we decided to do that because of, all the brand new clients that were quite eager to get into the market. So that's just one of the parts of trading. It's just one of those things. Low volumes, things didn't work out exactly as we wanted them to. However, we have a lot happening this week. We're starting off the week with earnings season, right? So the first week of every new quarter, this is a brand new quarter, we start to see the results of the fourth quarter of the previous quarter, right? Now we're going to start off the week this week, and we're going to get some data from some of the big banks, right? Now, again, when we talk about earnings, for those of you who are brand new, we're talking about earnings of publicly listed or publicly traded companies, right? Behind me right now, this is the S&P 500 heat map. This is the companies that contribute towards that S&P 500, right? In their different groups: technology, communications, healthcare, banking, etc. So these companies, because they're public, they need to release their financials, right? Every quarter, they present their earnings, their losses, their budgets, their forecasts, etc. Now, this is quite important because, again, these companies contribute largely to the market cap or the valuation of some of these indices or some of these groupings, right? So some of the companies that are in the S&P 500 are also in the US 30, which are also in the NASDAQ, or otherwise known as the US 100. So just a quick update in terms of how that works. Now, we are going to see some of the items from the big banks, right? We're going to see JP Morgan, Wells Fargo, Bank of America, BlackRock, and Citi. They're going to give us their earnings this week. Now, we'll be breaking this down in tomorrow's session of Premium Plus. What are these expectations and when are these earnings reports happen? Now, the interesting thing about some of these earnings reports and why they're so fun to pay attention to, unlike fundamentals, which is, as we saw on Friday, we saw the US dollar was supposed to be super strong. It reacted one way, then reacted a complete opposite way. We'll break that down in gold in a second. These other fundamental data points, in terms of these earnings reports for companies, are really set in stone. They kind of say, hey, this is what we've earned, this is our expectations. And really, the big part about this is the earning calls with the CEOs and with the board that happens either before or after market hours. Now, most of the large cap or the big companies, like the ones we're speaking about now, their earnings calls will be after hours. So it'll be a pretty eventful week. We'll cover some of them. You can listen into some of the CEOs of some of the biggest companies in the world speak about the economic climate that they're currently facing and what investors really look for. And the same thing when it comes to Powell and these speeches is, what are they forecasting? What are they saying? What hints are they dropping? What clues are they giving away about the future of this particular company, the company that they're speaking about, as well as the general economic climate? And this generally stirs investors, excites investors, and sometimes scares investors, depending on what they provide forecast on. Well, you may say, well, Dan, but why don't they just forecast really good things? Well, the reality is what they forecast before and the targets they hit is what investors look at. So already in the last earnings season, so at the end of Q3, they're providing guidance on Q4. Now they've got to hit or miss on that earnings, and that will affect the share price of these companies. So very, very eventful. And if you're new to trading, this will be a great way to get you into stocks and how stocks work, shares work, etc. They also report their earnings, the EPS that essentially shareholders get, earnings per share. Now, another great thing I just want to let you know, if you are a part of TDM Markets, or you do have an account with our trusted partner broker, which provides a pure SCP account, you actually earn dividends, right, on the positions you hold on things like S&P 500, NASDAQ, and US 30. Right, if these companies report earnings and you are in a position or you're holding shares in these particular companies, you actually can earn money off of these positions, right, in actual terms of dividends. So if you didn't know that, welcome to the party. This is why we only trade with pure STB accounts. We don't trade with B-Book brokers or any of these other guys. So if you don't already have an account, make sure you open up. Just a quick shout out to Petunia and El Lecatle. Yeah, I don't know. I've really got to double check. It'd be great if you can just put your first name in there. We'd really appreciate that. Okay, so quite a bit happening this week in terms of those earnings reports. There's going to be some fundamentals. We should see some CPI numbers again this week. CPI generally follows NFP. Obviously going to pay a bit of attention to that. Markets pretty much neutral across the board. We're seeing a bit of negatives, some good positives, but this really comes down to that shock NFP that we got on Friday. So what happened with the NFP and why was it such a big shock, right, to the markets? So first and foremost, we need to understand that the NFP on Friday basically printed out stronger than expected, right? Unemployment didn't tick up, unemployment remained the same. However, we did see a bunch of new jobs being created, in the US. Average hourly earnings picked up, while average hourly hours worked remained slightly lower. So people worked less hours but made more money, right? So across the board, it showed a very, very strong labor market in the US. And this should have had an effect, an immediate downside reaction on something like gold with a stronger dollar. We initially got that reaction, right? And this is gold on a 15-minute time frame. But then half an hour passed, gold had pretty much came back to the same level. And again, because of how strong these readings were, I was under the expectation we would see a continuation to the downside, both on gold, USD, NASDAQ, these types of items, right? And we didn't. We got a massive amount of strength, otherwise known as dollar weakness, when we got some very, very clear, good dollar data. Now, from my perspective, and I've spent the whole weekend thinking about this, spent the whole weekend reading through journals and articles, really to, break down why did we see such weakness in the dollar when we got such clear evidence of a strong dollar. And honestly speaking, this purely looks like manipulation to me, right? I believe it was a slam dunk weakness, slam dunk strength to the dollar, and some big banks, big liquidity firms decided, hey, this is the point at which they're going to drop millions, if not billions, into the markets and cause some of these different reactions, right? So we got a complete and opposite reaction. Markets ultimately returned back to entry across the board for most of these pairs, but we saw on gold, for example, a 240 plus pip move in the opposite direction when the data clearly said one thing and markets did something completely otherwise, right? In some of these cases, markets interpret this data differently, but in this particular case for NFP Friday, it was a clear dunk that we should have received that stronger dollar. Everything pointed towards that stronger dollar. We did not see that, right? So again, that might just be part of trading in the first week of the year, but for me, again, I just see that as pure manipulation, right? We didn't see any news articles come out saying, hey, this is the reason why this happened. In the first few minutes of the NFP, or after the NFP had printed the data, news reports said, hey, stronger dollar, right? That was very clear. But then that opposite reaction, nobody was reporting on, and nobody has reported on since or given clarity on that. So for me, that basically stinks of Wall Street. That stinks of millions, if not billions, being dropped into a market to force a reaction. So generally speaking, how do we deal with this? Well, most times after a big event for NFP, right, markets volumes are a little bit lower, but we generally wait for the markets to make some sort of decision here, right? We can clearly see, even if I go into a 30-minute time frame, there is the sort of structure from NFP. We came sort of to that apex, and markets have since 3:30 this morning kind of sunk off and gone in the direction that they originally should have, right? So markets are kind of getting to that realization that, hey, stronger dollar here, labor market is way too strong. We're seeing a little bit of a sell-off there. Looking at the, let's have a look at the NASDAQ, right? Very similar market structure, however, has not really come to any sort of conclusion, right? We're seeing almost like a symmetrical triangle of indecision here across the board for most of these markets. Let's have a look at US30, similar type of thing. I don't think US30 has made a decision as yet, even though if we draw that out, we might see something similar to that. So US30 kind of giving away, all right, showing a little bit of that dollar strength. NASDAQ, which again took a major beating last week because of that lower than expected Apple forecast on sales of iPhones and watches. They should really be taking a beating, but they're not. So I would have expected to see NASDAQ slightly more depressed than what it currently is, but it isn't. US30 as well as gold are sort of giving away that there was that massive dollar strength that led up after we got that jobs report, which should have happened in real time when we received the data. So that's part of trading fundamentals, and that's part of why I tell people, hey, don't get involved in the hype. Be there to understand, be there to look at the data, but also understand that markets aren't as clear-cut as just data and what it says on a piece of paper is what should happen in the markets, right? There's often some other obstacles. And again, when it's too obvious, that's when bigger powers that be generally step in and kind of push a little bit of money around and change volumes and change directions a little bit as they see fit. However, it is going to be a very interesting week this week. We have, again, some earnings reports. We should see markets normalize from a volume perspective, so our signals should start to kick off and hit the mark a ton more accurately. In most weeks, again, in the past couple months, if not the past year that we've been testing our data, we've absolutely smashed it every single week. So we should see that come back into norm. That is our normal, is that we kill it. So we're looking forward to seeing that again take part this week. Now, again, earnings report is happening over the course of this week. You're going to see a trickle down of big bank data, and I will decide this week which ones of those we cover in a live session. So I'll put it on the Premium Plus group as a poll. You guys can vote for which company you want us to cover live, right? Again, if you're not part of Premium Plus, what are you doing? It's less than $1 a day. I got a lot of questions in the groups and direct messages of people asking how do they get part of Premium Plus. It is super, super simple, right? So if you're on the default homepage, right, you can go into the classroom anywhere, right? And any items you don't have access to that may be blank or gray, you can click on that, and if you open that, it'll then take you into Premium Plus, right? Premium Plus will then show you, give you an option, what is it all about, how do you get access to a little bit of a chart and breakdown of the sheets, and you can then obviously subscribe for $30 a month or less than $1 a day. Right, so super simple, super, super easy. Guys, it's Monday. As always, be safe and trade safe. I'll see you guys a little bit later. Dollars for lunch will be happening tomorrow as per the calendar. So you can jump into your calendars and just double check what's going on there. And those shows will be how it's going to be set in stone. So we hope to kill it this week. We're glad to have you with us. We're glad to have you part of this trading journey. And as always, we'll see you a little bit later. And until then, goodbye.